In this video, we're going to review the entire year of 2021 and see what the market did in Tucson. And be sure to stick around to the end because we're going to give you the forecast for what to look for in 2022. It's Steve Dooley. So to get started, we're going to take a quick look at the December stats in the Tucson MLS, and then we're going to dive into the bigger picture and what it looks like going forward into 2022. As you can see, our average sales price is around $324,000. This is for single family homes, and all this data is pulled off of the MLS, as you can see right there. This is actually just directly from our Tucson local MLS, and $324,000, up 22.7%. So year over year, we're sitting at quite a bit more. And if we look compared to last month, if you were here, it's up from that. It was 316 in November. So the prices are still on the rise. New listings up 4.3%. So people are still looking to sell houses and buy houses. So demand is definitely there, and houses for sale are increasing, which leads to that stat. The number of homes for sale as of the month of December was 1,600. It's down 30% from last year. Not as bad as it was the year before, though. Not as much of a decrease. Although 1,600 homes, as you'll see in a little bit, is still, very much a seller's market right now. The average days on market, it is at 6. It was down at 5 earlier. So it has increased by 1 whole day, but that's an average day, an average listing. So if the house is, trash or something, then it's going to sit longer. But on average, we're looking at, 6 days on market. And we're sitting at 1.1 months of supply. So that means that if no new houses came on the market, all the houses in our area would be sold in just over a month. Percentage of list price, we're still sitting at 100%, which means it, again, as it was pretty much this whole year. If you are considering purchasing a home and you're thinking about lowballing it, you're kind of shooting yourself in the foot. So get ready for some frustration and not a lot of accepted contracts. So this goes all the way back to 2008. And if you remember that was when it was, at its peak there. So back then, average sales price was $235,000, which, at the time was a lot. I remember buying my house in 2004 for $185,000, and it was a brand new build. And then it was like up to $250,000 or so by 2008. So a lot of growth had happened prior to this. But after 2008, that's when it all kind of took a dump on us, as many of us know. But since then, it has been on the rise, and it is really going up right now. So right now we're sitting at 324. The $50 million question is are we at the top of this, right? And is it going to go back down? And if so, how much? So that's sales price. Now, the number of homes for sale, this one's kind of important. This is our inventory available. Again, there was a lot back then because everybody was trying to sell their houses. 7,000. We're looking at 7,000 to 8,000 homes for sale back here at this point in time. And of course, now we fast forward all the way here. We're at 1,600. So it's going to take a long time for us to build up this inventory. I don't know how long, but probably years. All these houses aren't just going to come for sale like overnight. Even if the economy takes a crap and stuff, it's still going to take time for people to get houses ready, put them on the market, because that's a big discrepancy. I mean, 1,600 to like 7,500. It's like 6,000 houses that need to pop up, for sale. So inventory is still super low. One thing that I did notice here is it is kind of like flattening. So it's kind of a leading indicator. that we're getting some more inventory, not much, but just a little bit. And it may be an indication of, a little bit of slowdown in 2022, but as long as interest rates stay low, it's still going to be a high demand. So again, days on market, this is over time. Back then we were looking at 94 days, which I'm going to flip this one too, which was about 6 to 8 months of supply. That's going to be a buyer's market. Any 6 to 8 months is going to be a lot of supply and a lot of days on market. So those two kind of go hand in hand. But right now you can see it's down to 6 days. But here's what I want to show you. Again, there's a flattening here. So it was 6, the end of November was 10, and then it dropped all the way down. It bottomed out this year at 5 days on market, but now it's up to 6. So part of that might be the annual cycle, and part of it maybe we're getting some more inventory coming in. Percentage of list price, well, you can't get more than 100, and it's been that way since 2020, since the second half of 2020, right after COVID. So the $50 million question is what's going to happen to all this, going forward? Is now a good time to sell my house? Is now a good time to buy my house? Don't have a crystal ball. However, I would expect more of the same this year, maybe a little bit of slowdown. Interest rates are still low. There's, if you have a good credit score in the upper 7s, you can get them for 3.5. And then if you're in the 6s, it's right around 4.2, 4.3. So either way, super low interest rates compared to historical averages. So that's probably going to continue. The only thing that could change that is if the Fed raises the rates. It could cause a little bit of slowdown, but it's still going to take time for that to happen and for us to build up more inventory before the market will turn the other way. I hope that helps a little bit and gives you kind of an understanding of where we're coming from. Again, we don't have the crystal ball, but if you do have any other questions, or if you would like to meet me or schedule a time to talk over anything real estate related, just go ahead and visit stevedooley.com. I'll put a link in the comments, and I'm happy to sit down, to chat with you, and see if we can be of service. Have a great day. Thanks for watching.